Hello and welcome. The 2025 budget has just dropped, and let me tell you, it is packed with changes that are set to shake up the UK's financial landscape. That's why the experts at Pro Tax Accountant have put together this special analysis for you. We're going to break down exactly what this means for your money, for your business, and for your future, starting in 2026. So why all the big, tough decisions in this budget? Well, it really all starts with this one number, £16 billion. That's right. The Office for Budget Responsibility estimates that because our national productivity hasn't grown as much as they'd hoped, the government's going to be short about £16 billion in tax money by 2030. That is a massive hole to fill, and it's the real reason behind every single tax hike and spending change we're about to talk about. Okay, so here's how we're going to tackle this. We'll start with a quick overview of the big picture. Then we'll dive right into the personal tax shocks that affect your wallet. After that, we've got a section just for business owners and freelancers. We'll look at some new hidden lifestyle taxes, cover the huge changes to pensions and welfare, and then, most importantly, we'll talk about your next steps. All right, first up, let's set the stage. You see, to really get why these tax changes are happening in the 2025 budget, you've got to understand the economic puzzle the government is trying to solve. So, the government has laid out these 5 core promises. On paper, every single decision in this budget is meant to help achieve one of these goals. But as we go through the details, you'll start to see the tricky balancing act here. For example, trying to cut national debt often means bringing in measures that, can make the cost of living feel even higher for a while. And this chart, this really gets to the heart of the problem. You can see that since the big financial crisis, UK productivity has just been crawling along at 0.6% a year. That's not just slow, it's way behind our peers like Germany and the US. And when productivity is low, it hits everything: wages, business profits, and yep, you guessed it, the amount of tax the government collects. It's the root cause of that $16 billion problem we just talked about. Okay, now for the part I'm sure you've been waiting for. Let's talk about how all this economic stuff is actually going to hit your wallet and change your take-home pay. So one of the biggest shocks in this budget isn't actually a new tax at all. It's a stealth tax called fiscal drag. And this slide shows it perfectly. See, normally the amount you can earn before you pay tax or pay a higher rate goes up with inflation. But right now, those levels are frozen. So when you get a pay rise, even one that just keeps up with inflation, more of your money gets pushed into a higher tax bracket. You don't feel any richer, but believe me, you're paying more tax. And this isn't just a short-term thing. The tax-free personal allowance and the higher rate threshold are now locked in place all the way until 2031. Think about that. If you're, say, a freelancer in London and your business grows over the next few years, a bigger and bigger slice of your hard-earned cash is going to be taxed at a higher rate. It's a long-term squeeze that's going to catch millions of people. Now, stay with me here. This next point might surprise you. It's not just your paycheck that's being targeted. They're also raising taxes on income from your investments and savings. As you can see, the rates on both dividends and savings are going up by 2 percentage points. This is a pretty big deal for anyone with savings outside of an ISA, for investors, and especially for small business owners who pay themselves in dividends. And here's a pro tip from the team at Pro Tax Accountant. With taxes on savings going up, tax-free accounts like ISAs become more valuable than ever. But there's a catch. Be aware that from April 2027, the amount you can put into a cash ISA specifically is being cut to $12,000 a year. The overall $20,000 limit across all types of ISAs is staying, but this is a really important little detail for savers to know. Okay, switching gears, for all the entrepreneurs, the self-employed, the small business owners watching this, listen up. Let's look at the huge changes the 2025 budget is bringing to your world. We've gone through the whole budget and boiled it down to 3 immediate action points for every business owner. Whether you're thinking about selling up, you're working in the gig economy, or you import goods, these are things you need to get on top of like yesterday. First step, and this one is a game changer for anyone thinking about their exit strategy, the tax relief for selling your business to your employees through an employee ownership trust, which used to be a completely tax-free way to sell, has been slashed in half. It's down from 100% relief to just 50%. The government said the scheme was just getting way too expensive. But for business owners, it means a fundamental rethink of succession planning is needed. Next up, they're closing loopholes. This quote is straight from the budget report, and it's aimed squarely at ride-sharing apps like Uber and Bolt. Basically, they're making sure these companies pay the same rate of VAT as everyone else. It's about leveling the playing field, but it probably means that costs are going to go up for those platforms and maybe for their customers too. But that's not all. This is where we start to see costs creep into our everyday lives in ways we might not expect. This budget has a few new taxes that are aimed at specific lifestyle choices. They won't show up on your payslip, but they'll definitely show up on your bank statement. So let me ask you a simple question. Do you drive an electric car? Because if you do, your answer is about to get a whole lot more expensive. Yep, the tax-free ride for electric vehicles is officially coming to an end. The government's worried about losing all that fuel duty from petrol and diesel cars. So from April 2028, they're bringing in a brand new mileage-based tax for EVs. It's called Electric Vehicle Excise Duty, or EVED. And it doesn't just stop with cars. From October 2026, there'll be a new duty on vaping liquids. The higher rate of air passenger duty is being expanded to cover private jets. And taxes on online gambling are also going up, with the money intended to help fund addiction services. Okay, let's turn to some of the really big structural shifts in this budget. These are the changes affecting pensions and the welfare system, and they have huge implications for millions of people across the country. Now, this is a huge number. In what is probably the single biggest social policy announcement in the 2025 budget, the government is getting rid of the two-child limit on universal credit. That starts from April 2026, and they project this one change will lift 450,000 children out of poverty. It's a massive deal. On the other hand, some things are definitely being tightened. For instance, a really popular way to save into a pension, called salary sacrifice, is being capped. From 2029, you'll only get national insurance relief on the first £2,000 you contribute this way. Also, some universal benefits are changing. The winter fuel payment will now be targeted, only going to pensioners with a taxable income under £35,000. Phew, okay, we have covered a lot of ground. So after all that information, what should you actually do? Let's boil it all down into what you need to remember and how you can prepare. So to wrap up this whole analysis from Pro Tax Accountant, it really comes down to four main things. 1, fiscal drag is the new reality, so expect to pay more income tax. 2, if you own a business, reliefs are getting tighter, so you need to review your strategy. 3, those new lifestyle taxes mean things like driving an EV are about to get more expensive. And 4, the welfare system is seeing a major shakeup, especially for families. And all of that leaves us with one final and really critical question for you to think about. The ground is shifting under our feet. These aren't just small tweaks. These are major shocks to the tax system. So the question you need to ask yourself is your financial plan truly ready for 2026 and everything that's coming after? Now, before you rush off and make any big decisions, it is absolutely essential to remember that this analysis has been for general information only. Everyone's situation is different, so to get advice that is tailored specifically to you and to find out exactly how the 2025 budget will affect your finances, we strongly recommend you contact the experts at Pro Tax Accountant. You can reach them on WhatsApp or by phone at 079-85689912, or you can email them at info@protaxaccountant.co.uk. Thank you so much for joining us.